What if one banking regulation change quietly affected your fees, your credit access, or your job, and you never even noticed? That's exactly what's happening right now. Banking regulations are changing, and whether you work in a bank, a credit union, or just use one every day, these changes matter more than you think. In this video, we're breaking down the latest banking regulation changes in plain English. You'll learn what's changing, why it's changing, who benefits, and how it affects banks, credit unions, and consumers. No politics, just facts, context, and impact. Banking regulations exist for one reason: trust. They protect consumers, ensure fair lending, and keep the financial system stable. But regulations also come with costs, especially for smaller institutions. That tension is at the center of today's changes. Recent developments show a shift toward banking deregulation. Lawmakers supporting deregulation argue that current rules are too complex, too costly, and slow down innovation, especially for community banks and credit unions. The goal is to reduce compliance burden while still protecting consumers. Large banks can absorb compliance costs. Small banks and credit unions often can't. That's why many regulation changes focus on institutions that serve local communities, small businesses, and everyday consumers. One of the biggest regulatory discussions involves the Consumer Financial Protection Bureau, or CFPB. Proposed changes would reduce its funding, which supporters say limits regulatory overreach. Critics argue it weakens consumer protection. The CFPB enforces consumer protection laws across financial services. That includes fair lending, fees and disclosures, debt collection, mortgage servicing. Changes to funding directly affect enforcement scope. Another major update is how the CFPB enforces rules. Instead of broad statistical models like redlining analysis, enforcement is shifting toward intentional discrimination cases. Mortgages are now a top priority. For banks and credit unions, this means fewer wide net investigations, more case-specific enforcement, higher focus on documented intent and policies. Compliance strategies must adapt. Another proposed change involves debit card interchange fees. Currently, fees are capped at about 21 cents per transaction. Some argue this cap hurts small banks by limiting revenue needed to fund services. Interchange fees help fund fraud prevention, card rewards, account infrastructure. Adjusting the cap could increase revenue for smaller institutions, but may also affect merchant pricing. Another major topic is Basel III, a global banking framework designed to strengthen capital requirements. Supporters say it prevents bank failures. Critics argue it restricts lending and slows economic growth. Opponents believe Basel III requires too much capital, reduces lending flexibility, disadvantages U.S. banks globally. Discussions are ongoing about scaling or modifying requirements. Additional regulatory rollbacks include overdraft fee disclosure requirements, climate-related financial risk analysis, certain reporting and stress testing obligations. The argument is that these rules add cost without clear benefit. Supporters believe fewer regulations mean more competition, faster innovation, better consumer choice, especially for smaller institutions that drive local economies. Critics worry deregulation could reduce consumer protections, increase financial risk, repeat mistakes from past financial crises. Balance is the key debate. For bankers and compliance teams, this means staying informed is critical. Regulation changes affect policies, training, risk management, customer communication. Compliance isn't disappearing, it's evolving. For consumers, regulation changes can impact fees, credit access, loan pricing, transparency. Understanding these shifts helps you make better financial decisions. Banking regulations constantly change with the economy, politics, and technology. The key isn't choosing sides, it's understanding impact. Knowledge is protection. If this breakdown helped you, like the video, subscribe for banking and compliance education, and comment below, which regulation should we break down next? Banking regulations shape how money moves, how banks operate, and how consumers are protected. Staying informed isn't optional anymore, it's essential. This content is for educational purposes only and is not financial, legal, or investment advice. Please consult a qualified professional before making any financial decisions.